Welcome to JuPulse, your go-to source for crypto market insights from JuCoin. Today is April 25th, and we're breaking down everything you need to know about the current market landscape, from global macro trends and investor sentiment to key crypto indicators and Bitcoin's technical setup. Let's dive in. Macro market update. The big story this week is trade tension between the US and China. On April 24th, President Trump claimed new trade talks were underway, hinting at a possible reduction in tariffs. But China quickly pushed back, denying negotiations and demanding the US drop existing tariffs. This back and forth has injected uncertainty into global markets. Despite that, US equities rallied for a third straight session. The S&P 500 gained 2%. Dow Jones added 1.2%, Nasdaq surged 2.7%. Strong corporate earnings were the main driver. ServiceNow soared over 15% after beating expectations, thanks to rising demand for AI-driven solutions. Microchip technology also gained 12% after launching a new power module for data centers. Our take: the momentum is positive, but with geopolitical tension still in the mix, investors should stay alert. We'd call this a cautiously bullish backdrop. Fear and Greed Index. The Crypto Fear and Greed Index gauges emotional sentiment in the market by tracking factors like price, momentum, trading volume, volatility, and social trends. It's often used as a contrarian indicator, meaning extreme greed can signal a potential top, while extreme fear can indicate a market bottom. Right now, the index is at 60, putting us in greed territory. That's down slightly from yesterday's 63, which may signal some cooling. When the index leans into greed, it often means investors are becoming overly optimistic, a potential warning sign, but it also reflects the recent market strength. Bitcoin recently hit 94K, Ethereum broke above 1.8K, and total crypto market cap is now 2.91 trillion. Our view: sentiment remains strong, but this dip from 63 to 60 reminds us to stay grounded. We're still cautiously bullish here. Bitcoin dominance. Bitcoin dominance measures how much of the total crypto market cap belongs to BTC. It reflects capital concentration. When it rises, it means investors are moving into Bitcoin over altcoins, often during periods of uncertainty. BTC dominance has climbed 64.32%, its highest level in years. That means a larger share of capital is rotating into Bitcoin, likely due to macro uncertainty and a risk-off attitude in altcoins. We've now seen 8 green weekly candles in a row, and BTC dominance just broke past previous highs near 63.9%. Historically, this 64% level can act as a ceiling, and when it's breached, we often see altcoins flows follow. But as of now, Bitcoin continues to lead. Bottom line, alt season isn't here yet. BTC is in control. USDT dominance. USDT dominance shows the percentage of crypto market cap held in Tether, a stablecoin, and it's a great gauge of investor risk appetite. When USDT dominance rises, it means traders are fleeing to safety. When it drops, they're moving back into higher risk assets like BTC and alts. Lately, it's been falling fast. From a peak above 6.2% earlier this month, it's now down to 5.08%. That's a clear sign that investors are moving out of stablecoins and back into riskier assets like Bitcoin, ETH, and select alts. Our take: this is a bullish signal. Capital is rotating back into the market, but if USDT dominance starts flattening out or bouncing back, that could indicate caution returning. Liquidation heat map. The liquidation heat map highlights price zones where highly leveraged traders are most exposed. The spots where long or short positions are likely to be wiped out if the price swings too far. Market makers often target these zones to trigger liquidations, drive volatility, and open liquidity. BTC is currently trading around 93.2K. Below current levels, liquidation targets are relatively sparse until about 90K to 89K. Above current levels, there's a heavy cluster of short liquidations building between 94 and 98K. This suggests market makers may push price higher to trigger those shorts, a typical move in leveraged markets. But if BTC loses support around 92K, we could quickly retest lower zones. Conclusion: right now the heat map shows a slight bullish edge, but it's a narrow range. Stay nimble. Bitcoin technical analysis. To round things out, Let's take a look at the current technical setup for Bitcoin using the daily chart. We're focusing on a few key tools: EMA 10 and EMA 20, short-term moving averages to track momentum, volume to confirm strength behind moves, and the relative strength index, RSI, to gauge overbought or oversold conditions. Now onto the chart itself. Bitcoin recently broke out of a descending triangle pattern that's been forming since early January, a pattern that typically signals bearish continuation, but when broken to the upside, can lead to strong rallies. After multiple failed attempts, BTC finally broke above the descending trend line on April 11th, with strong volume and an EMA 10 to EMA 20 crossover, a classic short-term bullish signal. This breakout also cleared the previously stubborn 89K resistance level, which has since flipped into support. Currently, BTC is testing the 94.5K resistance zone, a key level that's capped upward movement several times. If bulls can push above it, the next target is 99K, where we may see new profit taking and short liquidations. The RSI is sitting at 67, just under the overbought threshold. It's beginning to curve slightly downward, which could suggest weakening momentum or just a pause before continuation. How this ties into the broader market indicators. The Fear and Greed Index at 60 shows growing optimism, and this breakout lines up with that sentiment. Bitcoin dominance above 64% confirms capital is concentrating into BTC, not alts, consistent with BTC taking the lead post-breakout. USDT dominance dropping to 5.08% shows traders are re-entering risk-on positions, further supporting a bullish case. And the liquidation heat map reveals stacked shorts between 94 to 98K, which could fuel a price squeeze if BTC breaks resistance. Conclusion: the technicals point to short-term bullish momentum, backed by on-chain and sentiment data, but we're approaching key resistance with RSI near 70. So any failure to break 94.5K could bring a retest of the 90 to 89K support zone. Keep an eye on volume, RSI shifts, and how price reacts around liquidation levels. This is where the next major move will likely be decided. The JuPulse verdict. After analyzing all key factors, here's our current market outlook. Bullish factors. 1. Breakout from a multi-month descending triangle with strong volume and EMA 10 crossing above EMA 20. 2. Fear and Greed Index at 60 reflects confidence without euphoric overextension. 3. BTC dominance at 64.3% confirms capital rotation into Bitcoin. 4. USDT dominance falling to 5.08%, signaling growing risk appetite. 5. Liquidation heat map shows stacked short positions above 94 to 98K, creating upward pressure. Bearish factors. 1. RSI around 67, showing elevated momentum that may slow or correct in the short term. 2. 94.5K resistance has rejected price multiple times. A breakout hasn't yet been confirmed. 3. Macro tensions between US and China could reintroduce uncertainty despite strong earnings. 4. Altcoins underperforming, suggesting traders are risk-aware despite BTC's lead. Our final verdict. Bitcoin's recent breakout and on-chain flows suggest short-term bullish momentum, especially if price clears the 94.5K level. A move into the 96 to 99K zone is possible if liquidation clusters above are triggered. However, the proximity of resistance and rising RSI remind us to remain cautiously bullish. If BTC fails to hold 92K, a pullback to the 90 to 89K range is likely. Watch for confirmation through volume, sentiment, and how BTC reacts to resistance. What's your take? Are you positioning for the breakout or waiting on a dip? Let us know in the comments below. Now, before we wrap up, let's shift gears for a moment. If you're already tracking the markets, placing trades, or even just watching the charts, why not earn some USDT rewards while you're at it? Check out the JuCoin Rewards Hub. It's your chance to get rewarded just for doing what you already love. Whether you're trading on spot or futures, or just completing a few quick daily tasks, you'll be earning as you go. Click the link in the description to sign up and start participating today. Jump in, complete tasks, trade smart, and stack up those USDT rewards. It's simple, it's fun, and it's happening now only on JuCoin.com. While the current outlook leans cautiously bullish, remember, markets can shift fast, especially with conflicting macro signals and high leverage in play. Even the most reliable patterns can break under pressure. This analysis is based on current data and structure, but always manage your risk and stay adaptive. This content is for educational purposes only and is not financial advice. If you found today's breakdown helpful, make sure to like the video, subscribe to the channel, and share your thoughts in the comments. Got questions or a different take? Let us know below. We'd love to hear it. We'll catch you in the next one.